When you hear people saying, yeah, the market's tanking, it's crashing 10%, 20%, 30%, sounds pretty ridiculous, right? They're really just trying to get headlines and sell advertising. Toronto real estate is really not that dramatic. Hey guys, what's up? It's your man Pete, and back with another market update video. As the Toronto Real Estate Board just released fresh off the presses their latest update for April sales numbers for the Toronto and GTA region. I'm sure you've already seen some headlines. I'm sure you've already read some articles or seen some things in the news, but you haven't heard from me yet, right? But it was certainly a much anticipated report because it's really going to tell us a lot about what's going on in the market. Of course, I'm going to stitch together my story and the things that I'm seeing out on the ground in the real estate market as a salesperson and broker. And then we're going to combine that together with what the market report says just to see if there's consistencies. And then I'm sort of going to give you my thoughts and my general overall sentiment and what the market is saying overall here in the past 4 months. And then after, of course, the Bank of Canada raising interest rates 75 basis points over the last 1.5 months, now we're hearing that there's going to be another rate hike, probably 50 bips coming on June the 1st. And we'll go into a few of the major stats and figures just so you have a better idea of what it is I'm talking about. But before we move on, just make sure you hit that subscribe button. Give us a like, guys. Tell us what you think. Tell us how much you love the show and love the channel. And then we're going to be able to reach more people out in the YouTube verse. Much, much, much appreciated. And we'll see you on the other side, guys. Okay, and we're back. So for those of you who missed my last video, I did a random study of some of the areas that I'm working in to sort of give you a sense of how those markets have changed or impacted since the 75 basis point rate hike that's happened in the last 1.5 months. Because of course the buying and selling was at peak frenzy in January and February of this year, obviously because of low interest rates. It was the winter time with low inventory. And of course there were still some of those lingering pandemic effects. But then once the Bank of Canada really started raising interest rates at around March, we started to see an impact on the market because they were signaling that they were going to continue to raise interest rates, and they were definitely following through on what they said they were going to do. And so we sort of started seeing the market taper off a little bit in the months of March and April. But in my last video, I talked about some of those phenomenal, really highly desirable neighborhoods such as the East End of Toronto aren't really impacted that much. They're maybe down about 2% at most, or even level, and in some properties they're actually going up in value too. So when we pull it all as an average, yeah, arguably it's pretty flat out in the East End right now. And so for some select properties in some desirable neighborhoods, you still are seeing some pretty intense bidding wars. Don't be fooled by the market. Don't be fooled by the stats and the headlines. It depends on the property, and you should definitely work with your agent very closely to make sure that you guys understand and analyze the prices correctly. But then of course, whenever the market ever turns here in Toronto, there's always places that suffer, right? So in this case here, it's the outer suburbs of Toronto and the GTA, which typically tends to be a little bit more delayed compared to what's happening in the Toronto area in the 416 region. But then also at the same time in the outer suburbs, they go crazy because the properties are bigger, right? You get so much more in the properties. You get a backyard, you get a basement, and some of those detached homes in the outer suburbs reach $2 million, which is insane because literally some of those homes were selling for maybe only about 1.5 or 1.6 about a year ago. So we're talking about possibly a 400 to 500,000 increase in those properties in 1 year. And so a little bit of a pullback is not out of the question here. It's definitely healthy for the market, right? So if houses reach 2 million that probably shouldn't have reached 2 million and they pull back to 1.9 or 1.8, I think that's very reasonable. But you're not really seeing those kind of huge declines in the Toronto region or anywhere downtown. Definitely not. Of course, in the city, we're not really talking about $2 million properties, right? We're really talking about maybe $1.3, $1.4, $1.5 million townhouses or semi-detached homes, right? And that's pretty much the bulk of the market, right? So for most people who are moving out of the downtown core, out of their condos, are probably going to buy a property that's $1.2, $1.3, $1.4, $1.5 million. That's sort of your typical upgrade. And while prices are not really that significantly impacted, it's just what we're seeing is that there's a lot less offers, right? So for the same house 3 months ago, probably would have gotten 30 offers, but today it's only getting 3 offers. But that doesn't necessarily mean that the price is dropping or declining. It depends on really how strong the seller is and how much the buyer wants that house. And so if we look at the average sale prices, right, the month of March, average homes were about $1.3 million. It was like 1,299 or something like that. So then just 1 month later, after the impact of the rate hikes, the average price pretty much went about 50,000 less, which really represents just a small 3% decline. So for you guys out there who are saying there's 20, 30% 30% overall, I have no idea what you're talking about. For the entire market in Toronto to tank 20 or 30% overall, we've got bigger problems in the economy, and it's not just housing. And then if we measure it at its highest point, the high water mark for the year so far, which was the month of February, average prices were $1.344 million. So then if you factor in all of those rate hikes, we're really just looking at a 6% decline from February till April. It's a lot of money, but it's not a double-digit decline, okay, guys? Let's get real here. But really, as I've been talking about for months and months or even years here on my channel, is that inventory is the big issue, right? There just isn't enough inventory. But as you can see, there's enough inventory right now in this moment of time because it's the spring market season, and obviously the economy has been impacted by policy changes by the government. These kind of changes in the market, they never go in lockstep. They never happen at the same time or even at the right time. And so it kind of creates a good buying opportunity for somebody who wants to get into something better right now versus getting into a crazy frenzied bidding war for something that you're just lukewarm about. Trust me, guys, that's a win here in Toronto real estate. And so really the window we're talking about here is maybe about 1 or 2 months at best until sellers who can't sell their properties are just like, you know what, I'm going to rent it out. I'm going to figure something out. I'm going to refinance. I'll do something else with the property and I'll sell it later. But for now, in this spring market here in 2022, you're still going to have a lot of supply. You're still going to have a lot of things to see. Unfortunately, that actually creates a lot of buyer indecision as well too. They don't know what to do. And so it's like, oh, there's too many options. I don't know what I should do. Or should I wait longer and then the rate hikes are going to be even higher? Look, if the rate hikes end up being even higher and the market becomes even more impacted, again, you're going to see sellers reacting and they're just going to not sell their property. There might be a few that will sell for a little bit less, but it's not like they're going to give away the properties, guys. And arguably, because I'm out there looking at a lot of properties, you're seeing some of the nicest stuff out there right now that I've seen probably in the last 6 months or even in the past year, because inventory has been so tight during the pandemic, right? Especially last year that, anything that came out, it just attracted a ton of offers and so much interest. And so it's a very interesting time. It really depends on how you look at the market, but I personally, if you're a buyer, look at this as an opportunity. So yeah, this is definitely one of the best times to be looking at property and for picking something up that's much better value right now. So then if we look at the transactions that were done in April, we really dropped a ton in terms of comparing it to April of 2021, which of course was a very unusual year, right? So the numbers are a little bit wonky there. But we're pretty much back in line with what April numbers were like before the pandemic. So in April of 2019, I think we did around 9,000 transactions at this time. And this year we did 8,000 transactions, so a little bit less. So, it basically suggests that not a lot of deals were getting done because we have this sort of misalignment of prices where sellers think they should sell for this much, buyers think they should sell for this much. The market's going to figure itself out over time, and it's probably happening already right now as we speak. So it'll be very interesting to see what's going to happen over the next several months here in May, June, and July. But it's pretty clear from a price perspective that the market's not tanking, okay? And sellers are not desperate to get rid of their properties. Trust me, it's never been that way for 15 years. It's not going to start happening now. So then if we take a look at the new listings or the new inventory that came out in the month of April, there was 12% less properties coming out. And so you can already see that the market's responding. Sellers are reacting to what's going on. They're just saying it's not a great time to put the house up for sale. Maybe wait a month or two for things to sort of settle down a little bit. That's definitely the response when the market is not favorable to sellers, is they're just not going to sell. The ones that are selling are the ones that are really, really motivated. They have to move on because they've purchased something else already. So again, just to recap, prices are down slightly, I think in a healthy way, and mostly it's driven by outside factors and policy rate decisions, things like that. And deals are still getting done. It's not like it's completely fallen off a cliff. It's just that we're sort of back in line with how it should have been instead of how it was during the pandemic. And so we're holding quite steady at about $1.25 million as an average selling price for all of Toronto and the GTA. And then if we compare prices from April of last year in 2021, we're still up 15%, double digits, which is a lot. Personally, I think another rate hike on June 1st would probably be just overkill, but it is a new reality that everybody needs to get used to, especially for the younger people out there who are used to, sub 2% interest rates, which is basically free money. That's not really normal. That's not really healthy for the economy, right? So even if interest rates went all the way up to 5%, it's still not expensive, but we're probably not going to finish there. I think they'll probably finish at around somewhere 3.5% at most, because you want to make sure the economy is stimulated while still battling the inflation problems. So I think the policymakers and the government people have to be very, very careful on the economy here. It's not that they have to make decisions completely based on housing, but just know that you have to do it strategically. You have to do it smartly. You can't just slam the brakes instantly because you have to try to fight this inflation that's artificially caused by other factors. Of course, let's see how buyers and sellers respond, right, in the coming coming months, I sort of have my thoughts and my opinions on how that's going to play out. The fact is everybody's going to have to start getting used to higher interest rates, and you're just going to have to be paying more interest on your mortgage every single month. But then in turn, you don't have to battle it out. You don't have to get into intense bidding wars going $150,000, $200,000 over the asking price to get the house, even though that's very exciting for people and they actually like doing that. But that's not really the smart and the savvy way to buy a property. The smart and the savvy way is to buy a good property when times are tough, so that when the markets do recover, your property is going to be the one that's going to take off and you're going to gain an incredible amount of equity. Of course, in a new environment where interest rates is already high, everyone's used to it. It's like, okay, all right, what am I going to do? That's the reality of dealing with interest rates and real estate here in Toronto. Anyway, thank you all again for watching. I'm incredibly grateful. It was a very mouthy video, but I just wanted you guys to understand what's happening, what my thoughts are. I've had 12 years of experience. I've been through a few of these cycles already. So if you guys need help and you're definitely a savvy buyer, or maybe you're an investor, then give me a shout here at Selling Toronto. We can help you strategically buy the right and the best properties that are going to outperform when things get back to normal, or just get a much better house for you and your family. Either way, contact us here at Selling Toronto and you will not be disappointed when you work with us here. Contact is in the description below. It's also at the end of the video. I look forward to hearing from you. I look forward to working with you, and we'll see you in the next one. Thanks for watching. Bye for now.